Today, we're diving into why Spirit Airlines could be a smart investment opportunity. Before we get started, here's a quick disclaimer. This video is meant for educational purposes only and is not individual financial advice. Always consult with a licensed financial advisor before making any financial decisions. With that said, we're going to take a detailed look at Spirit Airlines' business model, followed by 15 reasons why investing in this company might be a good idea, and one reason why you might want to think twice. Let's dive in. This is Wealthlocity. Here you create, protect, and grow your wealth fast. Spirit Airlines is a leading ultra-low-cost carrier that operates on a no-frills business model. Essentially, they keep their ticket prices as low as possible by minimizing base costs and charging passengers for optional extras like baggage, seat selection, and in-flight food. The idea is simple. Customers only pay for what they use. Their fleet primarily consists of the Airbus A320 family, which helps streamline costs for maintenance and training. Spirit Airlines focuses heavily on price-sensitive travelers, particularly those flying for leisure or personal reasons, and their business model has proven effective in tapping into this growing segment. Now let's look at why investing in Spirit Airlines might be a great opportunity. Post-pandemic, we've seen a massive shift toward budget travel. More travelers are looking for affordable, no-frills options, and Spirit Airlines is perfectly positioned to meet this growing demand. People are more focused on price than ever before, especially for short-haul flights where luxury isn't a priority. Spirit's low fares attract cost-conscious travelers, a segment that continues to expand as people return to travel but want to keep costs down. This makes Spirit well-suited for future growth, as the trend toward budget travel is unlikely to slow down. This trend ensures consistent demand for Spirit services, helping drive revenue growth in both strong and weak economic conditions. As more travelers opt for budget airlines, Spirit can capture a significant portion of the market. Spirit Airlines is known for its highly efficient operations and effective cost management. One of the key elements of Spirit's success is its ability to operate with one of the lowest costs per available seat mile in the industry. By flying a single aircraft type, Spirit reduces training, maintenance, and operational complexity, which keeps costs low. Furthermore, Spirit Airlines is able to turn around aircraft faster at the gate, allowing for more flights with the same fleet size, increasing overall efficiency. Low operational costs are crucial in the airline industry, where margins can be razor-thin. Spirit's ability to maintain such efficiency allows them to offer ultra-low fares while still turning a profit, making the company a stable investment in an often volatile sector. Spirit Airlines operates one of the youngest fleets in the industry, primarily consisting of the Airbus A320 family. This gives them several advantages. First, a younger fleet is more fuel efficient, reducing one of the airline's biggest expenses, fuel costs. Second, younger planes require less maintenance, which means fewer delays, fewer canceled flights, and less money spent on upkeep. In fact, Spirit's fuel-efficient fleet uses about 20% less fuel than older models, giving them a competitive edge as fuel prices fluctuate. With rising fuel costs and increasing environmental regulations, airlines that can keep fuel costs down while meeting regulatory standards will have a significant advantage. Spirit's young, fuel-efficient fleet helps reduce operating costs and positions the company well for future sustainability trends. Unlike many airlines that depend heavily on business travelers, Spirit Airlines focuses primarily on leisure travelers. This is a key advantage, especially during economic downturns or pandemics when business travel is often the first to get cut. Leisure travel, on the other hand, tends to recover faster, as people continue to fly for vacations, family visits, and personal reasons. Spirit's ability to cater to this resilient segment of the market ensures a steady stream of passengers, even when corporate travel is down. Focusing on leisure travel makes Spirit more resilient during times of economic uncertainty, providing a stable revenue stream when business travel declines. One of Spirit's biggest strengths is its ability to generate substantial ancillary revenue. These are fees passengers pay for services like checked bags, seat selection, onboard food and drinks, and even for printing boarding passes. Spirit Airlines leads the industry in generating revenue from these optional extras, making up a large portion of their total revenue. Ancillary services allow Spirit to keep ticket prices low while maintaining profitability. As passengers become more accustomed to paying for extras, Spirit has successfully normalized these fees in exchange for rock-bottom base fares. Ancillary revenue is a key driver of profitability for Spirit. It allows the airline to keep base fares low to attract passengers while still generating significant revenue from optional services. This provides a profitable and scalable business model. Spirit has been aggressively expanding into underserved markets, including smaller airports and routes that other major airlines overlook. By targeting secondary airports, Spirit avoids the fierce competition that comes with larger airports and can offer flights at even lower prices. This expansion strategy allows Spirit to capture market share in cities and regions where competition is minimal, while still providing low-cost options to passengers who may not have had budget-friendly alternatives. Expanding into new, underserved markets increases Spirit's reach and revenue potential without the high costs associated with competing at major airports. This gives Spirit room for significant growth. Spirit Airlines consistently maintains a high load factor. This means that a large percentage of seats are filled on every flight. In the airline industry, profitability often hinges on how many seats you can fill per flight. The higher the load factor, the more efficient and profitable each flight becomes. Spirit's ability to fill seats, even with low fares, is a testament to their successful pricing and demand management strategies. A high load factor is crucial for profitability. Spirit's ability to consistently fill flights means they are maximizing revenue from each flight, which is key for driving profit margins. Spirit Airlines is known for offering some of the lowest fares in the airline industry. This competitive pricing strategy allows Spirit to attract a broad base of price-sensitive travelers. Their ULCC model means they can undercut competitors' fares while still making money through ancillary revenue. This pricing advantage gives Spirit a unique position in the market, especially for travelers who are less concerned with frills and more focused on getting from point A to point B cheaply. Offering the lowest fares ensures Spirit remains competitive, especially as travelers become more cost-conscious. The ability to consistently provide affordable travel options allows Spirit to capture market share from higher-cost airlines. Spirit has been steadily increasing its international footprint, particularly in Latin America and the Caribbean. These markets have significant growth potential, as demand for affordable air travel continues to rise. By expanding its network outside of the United States, Spirit can diversify its revenue streams and reduce its dependence on the domestic market. This also gives Spirit the opportunity to tap into the growing middle-class market in regions where low-cost carriers are less common. Diversification into international markets opens up new revenue opportunities and reduces Spirit's risk of over-reliance on any single region. This international expansion helps drive future growth. Spirit's primary target audience is price-sensitive consumers, those who are willing to forego luxuries in exchange for lower fares. This focus has allowed Spirit to capture a niche market of travelers who prioritize price over comfort. As inflation continues to impact consumer spending, Spirit's ability to cater to this budget-conscious segment will ensure ongoing demand for their services. Targeting price-sensitive consumers allows Spirit to maintain a steady stream of demand, even when the broader economy faces challenges like inflation or rising fuel prices. Spirit's growth strategy has been deliberate and measured. Instead of growing too quickly or taking on unnecessary debt, Spirit has expanded its fleet and routes in a sustainable way. Their approach to measured growth allows them to scale without overextending resources, which is particularly important in an industry as capital-intensive as aviation. Spirit is careful not to outgrow demand, which helps ensure profitability even as they expand. Smart, measured growth allows Spirit to expand its business without taking on excessive risk. This positions the airline for long-term profitability and reduces the risk of overexpansion. Spirit's ancillary revenue stream continues to grow, contributing a significant percentage of total revenue. As the airline industry shifts toward an a la carte model, Spirit has mastered the art of upselling optional services. From checked bags to priority boarding, Spirit has successfully turned these services into profitable revenue streams. As passengers become more familiar with Spirit's pricing model, ancillary revenue will continue to be a strong growth driver. Growth in ancillary revenue provides Spirit with a diversified income stream that isn't solely reliant on ticket sales. This model increases profitability and makes the business more resilient during downturns. Spirit operates with a lean workforce, which keeps labor costs down without sacrificing efficiency. By focusing on streamlined processes and cross-training employees, Spirit minimizes overhead while maintaining high productivity. This lean approach to staffing allows Spirit to offer lower fares and reduces labor-related costs, one of the largest expenses for airlines. Lower labor costs improve profitability and allow Spirit to operate more efficiently than many of its competitors. For investors, this means more room for growth without excessive expenses. Spirit Airlines maintains a strong balance sheet with relatively low debt compared to many of its competitors. This financial discipline allows them to operate with more flexibility and resilience in times of market turbulence. Their low debt also reduces interest expenses, freeing up more capital for future growth opportunities like expanding their fleet or entering new markets. Low debt means less financial risk for Spirit Airlines, making it a safer investment option for those concerned about long-term stability. The company's strong balance sheet is a key factor in its ability to navigate economic fluctuations. One of Spirit's biggest advantages is its ability to scale profitably. As the airline adds more routes and increases the size of its fleet, its business model allows it to maintain profitability at each stage of growth. Their focus on lean operations, low debt, and strategic expansion has positioned them to scale without sacrificing margins. Scalability is critical for long-term growth. Spirit's ability to expand while remaining profitable sets them apart from competitors that struggle to maintain margins as they grow. Now for the other side of the coin, why some people might not want to invest in Spirit Airlines. Spirit has long been known for its poor customer service and has frequently ranked low in customer satisfaction surveys. Delays, fees for almost everything, and a lack of amenities have hurt their reputation. While Spirit is transparent about being a no-frills carrier, many customers are dissatisfied with the overall experience. This negative reputation can deter repeat business and harm brand loyalty over time. A poor reputation can affect the long-term sustainability of the airline. If Spirit is unable to improve its customer service and reputation, it could lose market share to competitors that offer better customer experiences, even if they charge slightly higher fares. And there you have it. 15 reasons why Spirit Airlines could be a great investment, and one reason you might want to think twice. As always, every investment carries risks, so make sure to do your own research or consult with a financial advisor before making any decisions. If you enjoyed this video and want more content like this, make sure to like, subscribe, and hit the notification bell. Thanks for watching, and I'll see you in the next video with more money in your pocket.